everyone. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week of July 25th. Now, so far, following the Brexit vote, the central banks have taken their cue from the Chinese philosopher Lao Tzu, the founder of Taoism, who said, "By doing nothing, everything is done." This was the attitude of the Bank of England 2 weeks ago, the ECB last week, and looks likely to hold sway at the Fed this week, and possibly the Bank of Japan too. The more markets rally and the immediate post-Brexit turmoil recedes, the less the central banks need to hurry. The VIX index, the so-called fear gauge, has collapsed since the Brexit vote. It's fallen to the lowest level since August of 2014. So clearly the turmoil that was expected in the wake of the vote hasn't arrived, yet at least, and so policymakers probably feel no urgency to take immediate action. The exception might be the Bank of Japan, the central bank that has the biggest question mark over its head. As the national CPI continues to show deflation, people are losing confidence in the Bank of Japan's ability to meet the target at all. As a result, some analysts do expect the bank to increase its stimulus at this Friday's meeting. Personally, I expect that with risk aversion diminishing and dollar yen bouncing back up, the Bank of Japan is likely to stand pat. That could send dollar yen back down somewhat. As for the FOMC, the market's pricing in virtually no chance of a move in rates in either direction. The key points to look at in the statement will be how the recovery in payrolls in June affected their view of the job market and whether they continue to closely monitor global economic and financial developments now that Brexit's out of the way. The other theme of the week will be the advanced second quarter GDP figures, first from the UK on Wednesday, then the EU and the US on Friday. Of course, being pre-Brexit, there'll be even more data than usual. The UK GDP in particular may be disregarded, as it's expected to show accelerating growth. The EU is forecast to show a collapse in growth, which may raise expectations of an easing at the ECB September meeting and thereby weaken the euro. The U.S. figure, on the other hand, is forecast to show a return to over 2% growth, which could facilitate Fed tightening and thereby be positive for the dollar. As usual, the last week of the month is a big one for Japanese data. The most important one is the CPI, which is expected to show continued deflation on a national level. In the Eurozone, the IFO indices for Germany out today are expected to decline, which should be no surprise given last week's collapse in the ZEW index and the fall in the July manufacturing PMI. On Thursday, the market will be looking to see if German inflation does accelerate a tiny bit, as expected, which could be positive for the euro. That'll be followed by Friday's EU-wide CPI, also expected to accelerate a bit. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.